Hey everybody, Rob Maurer here, and today we are talking about a recent Elon Musk interview published today by Automotive News. This is actually a three-part interview, so part one was today, and then part 2 and 3 will be on Monday and Tuesday. The full interview is about 24 minutes long, and if you want to listen to the entire thing, which I would always recommend, you can search Automotive News Daily Drive in any podcast app. I don't believe it's on YouTube. While there wasn't a whole lot of earth-shattering news from the podcast, I did find it to be pretty informative. They began talking about Tesla's workforce and just reflecting on how they started with 5 employees, now up to about 60,000. Elon says by the end of the year, Tesla will probably be at about 65,000. As I said on the conference call, they are hiring a lot right now. Then Elon went into manufacturing a little bit and a lot of interesting comments around this. He started off by reiterating in response to a question about Tesla's long-term competitive advantage being manufacturing, essentially saying, as he has in the past, that in 10 years, probably almost all new cars will be fully autonomous. So if Tesla has autonomy, other competitors are probably going to have autonomy whether they build it themselves or get it from a supplier. Then, quote, they will also have autonomy, we will have autonomy, we will just need to be better at manufacturing than them, end quote. Elon added, quote, the reason I say the long-term sustainable advantage of Tesla will be manufacturing is that I think it's actually the hardest thing to do, manufacturing at scale effectively, end quote. One thing that I would add to that is that naturally I think there is just less interest in manufacturing, and Elon sort of alluded to this on the earnings call as well. Software has just opened up so much digital opportunity that a lot of really talented and smart people don't actually need to be involved in physical products anymore. And then you throw in the financial forcing functions like higher margins on digital products, the ability to grow much more quickly, and extremely low capital intensity. It just shifts a lot of the focus of the collective human talent pool away from something like manufacturing, which I think creates a gap or an opportunity for a company like Tesla that is actually able to get that talent excited about manufacturing. In this interview, Elon described that opportunity by saying, quote, you can think of a factory like a CPU or like a microchip or something like that. You bring the circuits closer together, you increase the clock speed, and then you can calculate some theoretical limits for the output of a given silicon fabrication technology. I think the same is true of factories. So if you actually look at the volumetric efficiency and the velocity of automotive factories, volumetric efficiency is extremely low. I would say in the low single-digit percentage, a couple percent maybe for volumetric efficiency. The speed is much slower than walking speed. Like a very fast automotive factory would be exiting a car roughly every 25 seconds. If the car length is 5 meters, that's only a speed of 0.2 meters per second. That's 1/5 of walking speed. So the fastest car factories in the world are only producing a car at 1/5 walking speed. This is not very fast, end quote. Elon summed up those thoughts by saying, quote, I think it is possible to improve automotive manufacturing efficiency by at least 1,000% and possibly 10,000%, end quote. The interviewer responded to that saying it's a pretty incredible number, and Elon, I think, said, although it was a bit unclear, yeah, it's more cars than you need. That does make sense for context there. A car coming off the lot every 25 seconds is 2.4 per minute, which is just shy of 3,500 per day, which according to some articles is the rate that a Volkswagen factory can produce at, though as best I can tell, that factory, which seems to have the largest output, produces maybe 700 or 800,000 vehicles per year. 3,500 times 365 is over 1.2 million per year, and even if you just take working days of 260, that's about 900,000, so not sure where the math is falling apart on that, but whatever it is, 700,000 or 1.2 million, if you 10x that, you're at 7 to 12 million, 100x that, 70 to 120 million, so increasing that output 10,000% or 100x would be too many cars. Although at the cost that would provide, that would probably open up the market quite a bit. Anyway, after seeing Tesla not really talk as much about automation and factory density and the alien dreadnought as much over the last couple of years, it's nice to see this focus come back, at least publicly, a little bit, and I would expect we'll hear a lot more about this type of thing during Battery Day. A few other interesting points here. Elon talked a bit about demand, reiterating and providing a bit more context on his comments on the call about demand remaining strong, saying, quote, we saw still strong orders through the whole pandemic. We still had good order volume, end quote. And then in follow-up to some conversation on dealerships, he said, quote, we really didn't see big changes to our sales as a function of where we had stores, end quote. So this is exactly the kind of thing I was talking about yesterday that businesses are going to be looking at very, very closely. Also on dealerships, the interviewer that Musk had spoken to, they had actually spoken about 5 years ago, and at that point in time, Tesla was saying that they may consider dealerships in the future if they needed them. Elon said here he thinks that is increasingly unlikely as Tesla grows, which I only really mention because it may be a positive sign in terms of the situation in Texas, where Tesla's not actually allowed to directly sell. Obviously, the hope is that that changes now that Tesla is building in Texas. I would have to imagine conversations have been had about that, but we really haven't heard much yet. The interviewer also did ask about Tesla's stock, specifically on Elon's comments that the stock price was too high. Elon said basically, if you look back at the last year, the stock has gone from $180 per share all the way up to peaking at about $1,800 per share, so a factor of 10 in just a year. Then he laughed at that saying, quote, "So I mean, what a difference a year makes," end quote. But overall, he said he doesn't spend much time thinking about how to manage investor expectations, saying it's not really worth it to try to massage the stock market, and that people should spend less time on marketing and more time on their product. Quote, "At the end of the day, if you make great cars and the company is healthy and making great products, investors will be happy," end quote. Definitely works for me. He did also talk about the broader market, saying that he's been relatively surprised at the slow pace of change, but that he does think that an inflection point has been reached where most major automakers are now pushing towards electric vehicles. But he did also mention that there are those in the market that are still a bit on the fence about what he called hydrogen fuel cell BS, saying that they will either get off the fence or the market will teach them a lesson. Guessing a not so subtle nod there at Nikola. So I think those were the big takeaways. He talked a bit about China, saying that China has been very supportive, but it's not like they're more supportive to Tesla than they are of their domestic manufacturers. Basically just saying that what they have done with Tesla is just how they operate. And he was very complimentary of just the overall mindset in China and the lack of entitlement or complacency that sometimes exist in the United States, saying that if you win for too long, you just sort of take things for granted. I know people have very strong opinions on both sides of this when it comes to countries and governance and politics, but at least as far as companies go, that is something I absolutely believe in and is a core part of my investment philosophy. Companies can definitely get fat and happy, and they just lose that ability to go through the period of pain that is required for innovation and disruption. I think probably the last thing worth noting, Elon did say that they could easily build a 500-mile vehicle today, obviously the S now over 400 miles, but that it would require sacrifices in terms of affordability and potentially cargo space, things like that. And really they're just focused on increasing energy density at the cell level, the pack level, and efficiency throughout the powertrain, HVAC, wheels, tires, etc. And that they're just going to keep pushing and improving on all of those areas. Last thing I want to point out for today, Tesla did send me an email on my shorts order and said that because of high demand, they have delayed at least my order and that it will ship in fall. I did order early, so I'm going to guess that goes for all orders. Definitely pretty disappointing, but I'm not going to read into it in terms of what that might mean for the stock like I did when it was released, which I do still stand by my assessment at that point in time. So I think with that, we will wrap it up for today and for the week. I hope everybody has an awesome weekend. Thank you as always for listening. Don't forget to subscribe, sign up for notifications, and make sure you're following me on Twitter at Tesla Podcast. And I'll see you on Monday for the August 3rd, I think, episode of Tesla Daily. Thank you.